What's up, investors? It's the Russian dude. So, it looks like that according to some economical and financial experts, such as for example Stanley Druckenmiller, the Feds might do exactly the very same mistake they did back in 2021, which led to an unsustainably high inflation, the situation they have been battling against for the last 3-4 years. Basically what this person is saying is that potentially we might see exactly the same scenario unfolding right now, right in front of our eyes. So let's talk about whether these allegations he is making are true, whether there is some reason behind them, and if can this possibly happen or not. Long story short, yes, according to Stanley Druckenmiller, his idea of the main mistake of the Federal Reserve back in 2021 is that whenever the inflation was already above the targeted level of more than 2%, I think this was not a surprise to anyone at that point, well, they still kept the interest rates at close to zero levels. They continued to purchase government bonds and treasuries like there is no tomorrow, which fueled the inflation even more, reduce the rates of these very same government bonds and treasuries because, well, that's pretty much economics 101. Whenever you buy a treasury or a government bond, whenever there is a big demand over supply, the price goes up, and well, the yields of these very income securities, they obviously fixed income assets, they obviously go down. Long story short, what is happening right now, it is in the very beginning of potentially the very same 2021 mistake, according to this person, what we might see once again in the near future. The Fed pivot only happened recently. The very first rate cut was way above than a lot of experts expected. It was the rate cut of 0.5% when the major expectation was 0.25%. And there are also talks that maybe some very rapid radical Fed pivots will continue in the near future. Maybe we're gonna see some fast rate cuts in the future as well. Inevitably, according to once again this guy, this might lead us to the very same environment we're going through in 2021. Whenever the rates will be incredibly low, the inflation is already reaccelerating. This is also worth mentioning. If you remember, the most recent CPI report showed a 3.3% increase. So, well, inevitably, once again, this might lead to exactly the same situation in 2021. The rates will be extremely low, maybe all the way down close to zero. The inflation will be above the target of 2%, which is, it is even right now above the target of 2%. It started to go up a little bit once again. And, well, the only thing missing from this puzzle is the government buying treasuries, government bonds, like once again there is no tomorrow. In case these things do happen, they can compound into another financial investment inflationary disaster. And well, the last time it led to the inflation once again that the Feds were battling against for the 3-4 years. Will the situation repeat itself this time? Well, there is a probability. The rate cut was relatively timely, to be honest. I would say I was personally expecting a total of 0.5% rate cut by the end of this year. Maybe I saw 0.25% rate cuts by the end of the year. This, at least in my uneducated opinion, I'm not saying I'm smarter than the Federal Reserve, but this was the appropriate rate cut in my understanding, because once again the inflation is still above the target. So yes, it was even a surprise for me when they did a 0.5% rate cut literally in a single meeting. Right now we're in the middle of October, most likely there will be another rate cut in November, maybe another one in December. So yes, in my opinion, I agree with this Stanley Druckenmiller that maybe the rate cuts will be a little bit way faster than previously anticipated. We might see once again low rates, we might see inflation reaccelerating, treasuries will be purchased, like will be vacuumed from the open market. So yes, I personally would say that there is some sense in these statements that this guy is making. We might see the repetition of 2021. After all, the economy is very cyclical, the events tend to repeat. It is always just a matter how the government's Federal Reserves respond to the familiar problems, because every single familiar problem most of the time requires different solution. So it will be very interesting to see what the Feds will do next time, which will not happen anywhere earlier than 2-3 years from now. Also my personal opinion. Well, there you have it, guys. Thanks so much for watching. Please like this video, subscribe to my channel. This was interesting, informative for both, and see you tomorrow.